Well, I can't see anybody, but good afternoon. Sorry, we couldn't buy you lunch today, so hopefully you've got something good in front of you and joined us during your lunchtime. Um, yeah, this is obviously was kind of quite the norm for a while. I think a lot of you probably we saw each other on some of the other Zoom meetings, so it's been a little while since we had the Zoom, but unfortunately, according to the numbers, it looks like we might be going back to some Zooming for a while or staying this way. So very unfortunate, but it's nice and fortunate that we can use technology. So thank you, Christy. For those of you who I not known or have not met, looks like we've got some folks on here. My name is David Hauser. I am the market manager for prime lending in the state of West Virginia and pieces and parts of some of the surrounding areas. So today is Lunch and Learn sponsored by Prime Lending. Like I said, sorry we couldn't buy you lunch, but at least you got us, right? And so on the call with me is Lori Harless, our production manager from Central West Virginia. All of you probably know Lori more than you know me. And I know Sarah White, as part of her team, is on here. Sarah is obviously in the Canal Boulevard office. I'm not sure anybody else is on here from our group. Without scrolling, I really can't find out. So I'll just have to go ahead and mention Linda Spurlock, obviously, it's with our group in Central West Virginia. Dustin Miller with our group in Central West Virginia as well. And Chrissy Bryant, for those of you who have met and worked with Chrissy. She does a phenomenal job as well. So, they're all here to serve you. And we're all here, as your teammates, your partners. And I think that's probably one thing that we've talked about in the past. For those of you who are on the WVAR calls, we spent a lot of time talking about understanding your local lender. And I think, fortunately for you, in the Central West Virginia market, as part of the Kanawha Valley Board, we have really good coverage there. We've got some great folks that I just mentioned on here, and they're going to go out of their way to serve you and be your partner. And now more than ever, and I've been saying this for the last couple of years, so if you've heard me say this before, it's now more than ever true, and I think you'll agree, is that real estate is a team sport, and understanding your local lender and what they do for you is more important than it's ever been, because there's a lot of activity, obviously interest rates being as low as they are, and nobody wanting to go out and venture around and talk to every bank in town. They're all doing it now more than ever online, and some of them are coming up. Some of your borrowers, your buyers, our borrowers, are coming up with some really interesting lenders that they're finding online. So what's happened is, obviously, as we started out 2020, the market was looking really good. We talked about the millennial buyers for years, millennials kind of driving the marketplace. Well, 2020, 2021 really kind of seemed to focus in on just that. The demographic of borrower was looking like the millennial, and it is the millennial actually. But as those folks come online and they're looking at homes, interest rates were good at the beginning of the year, and then they continued to drop. At the beginning of March, when this pandemic really broke and the markets kind of went crazy, the Federal Reserve did everyone a favor in the mortgage business, and understanding the impact of the 2008 financial crisis, which obviously looks a lot different than what this does, because that was obviously driven by bad behavior on behalf of the markets, on behalf of the lenders, and quite frankly, following the lead of what Congress and Wall Street was demanding that we do as an industry. So this financial crisis looks different because it's driven by a health crisis, right? So coming into 2020, we had a very strong economy. The president and the administration was doing a great job of driving regulatory issues for not only you and the real estate housing side, but also as for us in the housing finance side, driving positive change for us to be able to do more for more people, but still staying in the parameters of responsible lending. So in 2008, the average credit score was extremely low. I can't quite remember what it was now. We spoke about it several times. Credit scores, FICO scores were low. Down payments were nil, right? So very high loan to value or high LTV borrowing, or maximum financing, as we call it in our side of the street. And then in 2020, obviously, we're going in with a more responsible borrower, on a great economy, a growing economy, average credit score 720. Most have down payments of at least 5%, if not more. So good savings, good behaviors, less debt. And so it was a really good time for the market. So going into March, as the things started blowing up, one thing that didn't change was the individual's desire to continue to buy, right? So I think all of you would agree with that. I mean, the housing didn't stop. In West Virginia, looking at the numbers, which I had up here a minute ago, housing is still 70. Housing in West Virginia is still at 7, or actually first quarter 2020 was almost 78%. So very, very good numbers, about equal to where it was third quarter of 19. So when you take into consideration what's happening first quarter of the year, it's really good. Now, obviously, we'd like everybody would like a do-over in the first half of 2020, no doubt. But I don't think that anybody can deny the business has been good regardless. So the demographic of the borrower coming in obviously still has the desire to buy, and they want to take advantage of these really low interest rates. And so they're looking for the lowest rates, going back to that team thing, right? So they're looking online and trying to find the lowest rate because they understand that they're rate conscious and they want to get that. They also, what's interesting about the millennial buyer is they want to have a relationship of sorts with the lender. They want to understand what they're doing and make good decisions. But a lot of them are really not familiar with how all of that works because we are disconnected, we're disjointed. So they're really trying to do as much research as they can on their own. And in turn, coming up with some of these crazy lenders from out of town, which a lot of you have probably on this call have taken to Lori or Sarah or Chrissy or Dustin or Linda and said, hey, help us, because they found this lender online that wants to charge them $7,000 in closing costs, not counting their taxes and insurance or points or something like that. So having the relationship with your local lender and understanding what it is that we do differently is important. And also just having the ability to reach out and touch somebody in your local market and get a second opinion, or driving your buyer to somebody local and say, hey, I understand you got a pre-approval letter, and I understand that they want to charge you all those dollars for that loan, but I think you might be able to do better. That's not steering. Understand that is not steering. You're making a wise, you're giving a wise, critical piece of advice to your consumer and making sure that they get a second opinion. They're doing what's best for them and their family, because it is it's pretty broad out there. I mean, I've seen a lot of different things in the last few months, much different than the last financial crisis. So as these borrowers are buying, like I said, this is a team sport. So understanding who your teammates are and what we do for you and your customers is important. If you don't know your local prime lending person, obviously this is going to sound a little bit different than a lot of the calls you've heard me on before, because I really wasn't promoting prime lending, but today I am. And I can tell you that, looking at the state as a whole, prime lending runs a majority of market share on purchase applications, purchase transactions. We were just voted as the number 2 USDA provider in the state of West Virginia by the United States Department of Agriculture. The number 1 lender, I will tell you, for USDA lending in the state of West Virginia is actually out of the Eastern Panhandle, and they do most of their business in Virginia. They have one physical office, I think, in the state of West Virginia, and it's all around the DC market. So, when it comes to USDA, hey, we're here for you. But going back to, some of the things about the market and how it's changed, so you've got these first-time home buyers wanting to really take advantage of these low rates, lowest ever, lowest in history. And obviously inventory is a bit of an issue too, right? But before we talk about inventory, I want to touch on FICO scores and FICO score requirements. So I know a lot of conversation is always around, so-and-so will do a 600 credit score, and so-and-so will do a 620, and so-and-so is doing 680s. Well, all those numbers got really jumbled up for a little while, and it had to do with mortgage servicing and forbearance. It had to do more with forbearance, okay? So let me back up and say that, clarify. It had to do with forbearance, and forbearance was a part of the CARES Act that came out to alleviate folks from putting folks in a bad situation where they might lose their home, right? Giving the folks the ability to defer their payments for a period of time, 3 months up to 6 months, right? So 3 months automatically, and then they could get extension for another 3 months for a total of 6 months. Well, forbearance is not free, and as those forbearance numbers, as the government acted really fast to put in place the CARES Act, and they did it so fast they didn't. Hello, sorry, I lost you. Somebody called me. They didn't think through all the traps and all the pitfalls and all the negative consequences, because they wanted to put relief out there so people weren't panicked and weren't afraid to lose their homes. So forbearance, not free, but forbearance meant they could do that. And all a customer had to do was say, hey, we're going to lose our job, or we are affected by this virus. And boom, they don't have to make a mortgage payment, right? And so as those numbers started to go up, which is now actually down to 4.3 million mortgages in forbearance, it was just slightly over that, almost 4.4 million, just came down. A lot of those people jumped into that, which scared the marketplace. So all lenders, driven by their investor, right, driven by the mortgage servicing and the investors on the backside, said, hey, we've got to protect ourselves. So they started raising FICO scores on a majority of their products, mainly the Ginnie Mae loan. So you're familiar with Fannie, you're familiar probably with Freddie Mac, Fannie Mae, Freddie Mac. Well, there's also Ginnie Mae, and Ginnie Mae securitizes all of the FHA, VA, and USDA loans that are written in the country, okay? Well, Ginnie Mae loans are the most vulnerable because they are the government loans. They're the highest LTV loans, and they allow for a little bit of a gray credit area. So that's USDA, FHA, VA. And so you saw those requirements, FICO score requirements, rise probably the most, right? So your standard conventional buyer, there may have been a little minor adjustments. I don't think we took hardly any adjustment on those. And so was that general pool of first-time home buyers or the Ginnie loans that really got a hard look. And as time went on, throughout March, actually, I did a little bit of research on this. Out of the folks that took forbearance in March or claimed that they were afraid to make their mortgage payment, most of them continued to make their payments. As a matter of fact, in April, 46% of the folks that claimed forbearance that said they couldn't make their mortgage payment did make their payments in March or in April. So March it started. April we saw the first round of payments being due. 46% of the people that claimed forbearance continued to make payments. In May, that dropped down to 28% of the people continued to make payments. Okay, because they're starting to lose their jobs. A lot of them in hospitality or retail or restaurants. Obviously, that's hospitality. Started to lose their jobs, and it was obvious that they weren't coming back anytime soon. So payments started to be less and less. In June, only 15% of the folks that claimed forbearance were actually still making mortgage payments. In other words, now those payments are not being made. So the risk levels for a lender looking at those numbers gets to be higher and higher. When we did some research on some of the loans that we service, we found that 27% of all USDA mortgages that were being originated were in first payment default or in some sort of delinquency in the first 90 days. So we saw, a need to just maintain some of the higher FICO score requirements. And I know that they've been all over the place. 2020 has been a roller coaster of a financial roller coaster, right? It's been up and down, up and down. It's going to be, you see waterfalls of shortages and then talks of check mark recoveries or V-shaped recoveries, and we're still waiting to see what's going to happen. Now we've got this second wave kind of brewing out there. People are starting to get a little skittish and nervous again. But the reason I talk about the FICO score requirements and the default and forbearance is because that actually is what drives the risk level for all lenders, okay? Some have a larger appetite for risk than others. Some need that business more than others. So they're going to go out and they're going to try to make it work. There was also some penalties put in place for first-time home buyers and conventional buyers that if they didn't make their payment, there was a 5 to 7% hit if those loans that were originated did go into forbearance before the first payment or during the first 3 months. There's huge hits being taken on some of those. Lenders were looking at that. So, for example, if we would have wrote a mortgage for $100,000 to a first-time home buyer, and that went into forbearance, or they didn't make their first payment, that could have been a $7,000 penalty to the lender that wrote the mortgage. Okay, so understanding that might help you understand why the FICO score requirements have been kind of all over the place. And when you're working with first-time home buyers, or you're working with home buyers, I guess I should say in general, but especially first-time home buyers, and they're shopping online, that's why it's most important that you drive them to get a second opinion by someone local. And I don't care. I mean, hopefully it's Prime Lending, right? Because we're here to serve you. We're here to make sure that your customers get what they need and have a great experience. But if it's not us, just at least make sure you're driving them back to your local lending partner. But we're obviously here to serve you. Any questions on that? I don't know if you're able to take questions, Christy, on how that works. I guess I should have asked you before we started. There was a question and answers on this.
They can unmute and ask a question, or they can ask their question in the chat box, whichever they prefer.
Okay. Will I see that, or will you see that?
I will see that. I will let you know if there's a question. As of right now, there aren't any.
Okay, great. Well, we love questions. It makes time go by. So we are, right now we're seeing some improvement in that arena. Obviously, forbearance numbers coming down, but unemployment numbers are still, that 20 million folks filing unemployment. So there's still a lot of stress in the business or in the industry. Obviously, we have a need and desire for folks wanting to go out and buy homes, right? They've been quarantined in their small home, and they found everything that they could find wrong with their home. And now they want to either improve that home or go buy a newer, bigger home, or maybe just a bigger home, or make a home bigger. And they can do that with some renovation financing. I'll go ahead and throw that in. So as you're working with these folks and trying to find ways to go out and show them homes in a safe manner, which I know you've all done that, understand that I understand, and we understand that inventory is an issue. I also understand that renovation financing will open up some of those doors to some homes that may not be the most desirable, but they may be what's on the market. So if they're looking at a specific neighborhood, you found the right neighborhood, but maybe the house needs some work. That's okay. It's okay. Talk to any one of us on this call, and we'll get you some information on how renovation can change that. I guess talking more about being a partner in the local market and this being a team sport, obviously, we are, at least at Prime Lending, all of our folks are commissioned salespeople just like you, right? So yes, we provide a service. Yes, we're here. We counsel folks on how to buy a home and what's best for them. But at the end of the day, we are commissioned salespeople just like you, right? We're here to promote household formation and make some money while we're doing it. And so please understand that. And also understand that with interest rates being as low as they possibly can be right now, lowest in history, I guess I should say, that has also created a glut of business. So not only are we busier than we've ever been, we're also dealing with all those FICO adjustments and some of that tightening of credit underwriting that's out there. And that kind of puts a squeeze on the way we perform and deliver, right? Not necessarily the experience that you have with the local individual. Yes, they might be busier and it may take them longer to call you back sometimes. But for new applications, new businesses coming in, or new contracts coming in, I think it's, and we talk a lot about this on our group as well. And so I'm going to have the same conversation with you that I have with our sales team, and that's, when we're looking at the market, the shape that it's in, we've all found new ways to operate, right? We've been the busiest that we've ever been as Prime Lending, at least in the last 7 years, probably the busiest I've ever been in my career in the last few months than ever, right? And a lot of that is low interest rates, but it's also this pent-up demand that's just boiling out there, boiling over, people wanting to buy homes. Well, and also a large percentage of folks trying to refinance. Most of you probably have done. If you haven't, you might want to consider looking at that opportunity. But that's put great stress on the operations folks that not only we have, but in most companies across the country. I mean, I can't imagine it doesn't. I can tell you that I went through a list of folks that I communicate with on LinkedIn and different companies across the country. They're all looking to hire operations folks. They're all looking for processing. They're all looking for underwriting. We're all out there fighting over trying to get some more support staff because we're just busting at the seams with business and people wanting to take advantage of this. So having that relationship with your local lender is really important so that you understand what our timelines look like, right? So when you're writing a contract, you know, can I write a 30-day contract or should I write a 45-day contract? What does that look like? And so when I'm talking with our staff, or Lori is talking with her team, we're talking about, you know, the quality of the contract, meaning the quality that the time that we take to put into putting the application together. So it's not so much about having somebody with a good FICO score and a lot of money. It's really not. That doesn't make a transaction go fast. What makes a transaction go fast is having a good conversation with the lender that you're referring to, or vice versa. And then we're talking about the contract, and we're talking about the timeline, and we're talking about the consumer being understanding that these are different times. These are absolutely different times. We're working remote. We're still 40% remote, or 40% staffed. So 60, 70% are working from home or remote. So understanding that these are not normal times. We're the busiest we've ever been, and we're working remotely. Now, obviously, you've probably seen some communications from the local folks from Prime Lending about our e-close ability, our e-doc, our point serve ability. So we're able to obtain documents on behalf of the consumer. We're able to now e-close. A lot of that stuff is super handy, right? So technology's certainly been to our advantage. It's something that we invested a lot of money in leading up to this. And we were able to pull the plug and flip the switch on e-close as soon as the pandemic broke out. And we knew we were going to be remote. We would say, hey, let's roll out our e-close. So a lot of that's helped us with some of the overflow of business, but understand that we're doing the best that we can to get to the closing table on time. But a 30-day contract, if it takes the consumer 5 or 10 days to get us all their stuff, that gets to be a really tight timeline. So if you write a contract on July 1, so now we've got the 4th of July holiday in there. The customer doesn't really get to us, or we don't get the contract until the 5th or 6th of July, and then the customer takes another 3 or 4 days to get information to us. Well, now that makes that 30-day window more like a 20-day window. So on your side of things, I'm just going to ask you to please do this. On your side of things, I think for you to help facilitate that contract for not only your borrower, but for us as a lender, is letting them know, hey, your borrower's going to ask you, your lender's going to ask you for information. Make sure that you get them the information they need as soon as they ask you for it. Because a lot of times lenders or borrowers think that, okay, I made my application, I'm done. Well, no, you're not done. We still need this, and we still need this. So there's always this back and forth between us and the borrower, and a lot of times we'll leverage you in that conversation and making sure that you're helping us if we're having communication issues. And if we're asking you for help, then we need your help because we're having trouble communicating with the borrower. The borrower doesn't understand. Maybe they don't use technology, or maybe they don't have a car, or maybe I don't know what the deal is. But just know that these are extremely busy times. Every contract, we understand, you've got multiple offers on the contract, and the importance of getting that contract in the system and through the system seamlessly has never been as important as it is right now, because you certainly probably have backup offers on a lot of things. So we don't want to have those difficult conversations about backup offers and things like that. So, helping us facilitate those transactions are very important, very important. 30-day contracts, certainly doable. But if we're talking about FHA or USDA, we've got repairs involved, or we're talking about a house that needs a lot of work, That's obviously, it could take some more time. So again, having that team spirit between us, having that communication wide open, and talking through a contract before you write it, and maybe about the house and the particular needs of the house is a good idea. That way you're not having to redo things on your end, and we're getting it right, and communicating what the challenges may or may not be, especially if we've looked at the consumer. You know, we're limited on what we can tell you, but if we know that they're gonna, they've got some things that they need to clean up, or maybe there's things on title that you know about that you can communicate with us, so we can alert the title company or the attorneys that what's happening. You know, any and all information we're certainly willing to take it, and especially if it's going to help facilitate the contract. So, any questions or comments on that? I know that was kind of a lot, but I'm just curious what you do when are you having those conversations now? I mean, I guess this is kind of the funny part of Zoom, right? I ask you questions and you're probably answering, or you're nodding your head, and I can't see any of you. So this is the fun part. So I ask questions and get no answers. Not nearly as bad as the continuing ed. See, I'm getting ready to ask again. Was anybody on the continuing ed? That was 7 hours of me entertaining myself, talking to the eye in the sky. It was very, very interesting. So anyway, if there are questions, type them in. Christy will tell me. So with that said, and I say that a lot, sorry, team. It's all about team. You know, us, we're a team. You and Prime Lending, you know, we work together. We can get people to the table and make sure that they have a good experience, as long as we're communicating at a high level. So if you're not hearing from us and you're not getting automated communications from your Prime Lending rep, then I need to know about it, and you need to let them know about it. You know, I read a study not too long ago actually, it's funny, because I read this study about consumers and their contacts that they receive from their mortgage lender. And the consumer basically said, you know, that 80% of consumers would like to receive a phone call, but they don't necessarily receive a phone call. They might receive a text, an email, and this is industry-wide. This is not specific to West Virginia by any means. But most consumers would rather have a phone call, even if it's a phone call telling them that they have an email. They would like to have that. So it's funny, I read an article from Lawrence Yun, well, it was from the National Association of Realtors, and it said exactly the same thing, talking about the real estate agent and their relationship with the borrower, that they really want that phone call, whether or not it's there, you're talking to them, at least leaving them a message telling them that you need to talk to them, or at least saying, hey, I sent you an email, I don't want any of your time, call me back when you're done with dinner or whatever. So people would like to have that one-on-one communication, and using video technology obviously is a big win for you out there as we try to work together to do business, whether we're communicating back and forth like this with video technology, or you're talking to a group of buyers, or your buyer using this technology. This is what we have, and this is how we bridge the gap of not meeting face-to-face anymore and utilizing technology to form a relationship. So sorry, I kind of got down the rabbit hole with that one, but I think this is important, right? Using this to its fullest. So how can Prime Lending help you? So we're at 12:30. I know you're probably finished with your sandwich and your bag of chips is almost empty. So we'll try to kind of wind this down here a little bit for you. You know, Prime Lending is we're a full service mortgage bank. We offer everything that you could possibly need except for home equity lines of credit. But call us regardless, or have your customers call us, and let's have a candid conversation about how we can utilize technology to facilitate a transaction for them, but also custom fit a mortgage to their needs, whether they're a first-time home buyer, or a second home buyer, or a move-up buyer, or an investor. You know, we've got a product for just about anybody. FHA, VA, USDA, like I mentioned before, there's a little more tension around those right now. So having somebody that understands what that enhanced criteria might be, and the credit guidelines and credit scoring, and how to kind of navigate some of that is very important. Make sure that you're, again, referring back to your local. If they've been approved with someone online, or you're not familiar with the lender, make sure you're driving them to a Prime Lending rep or a local rep of some sort to make sure that that contract or that pre-approval letter is good. So all the government products and all the conventional products. And then again, as you all know, and I'm going to beat this drum a little bit here, is our renovation programs. So we have 20. The VA renovation loan is currently suspended, and it's suspended by the VA. The VA actually, as part of the COVID-19, they asked that their appraisers and lenders suspend all origination of the VA renovation mortgage, and that includes our VA buyer-seller held escrow accounts that we always talk about for the VA loan only. So the other 19 renovation loans and escrow holdback accounts that we can put together for just about any kind of repair are still alive and well. There's some enhancements on a couple of the products, but please don't lose a transaction to a property problem. Make sure that you're speaking to your local prime lending rep about what what issues you may know of going into a contract or transaction, and let us try to fit a product to that property. Whether the seller want to pay for repairs, let's put it on the contract. Let's put it on the settlement statement. Make sure that it's done right. Seller paid repair. Seller can get $5,000 for a new roof, whatever. We can put that right in the contract. You can put it in your ad too. If the seller wants to contribute that money. Or maybe it's a USDA, no money down buyer, and the house needs a new electrical service or a new HVAC, which is extremely common. No problem. We know they don't have any money. And so for you as a real estate agent, if you're going into a house selling a customer a property that has a 20-year-old HVAC system in it, let's do them a favor and talk to them about the opportunity that USDA affords them with the USDA renovation loan from Prime Lending. Because if we're putting a new couple with a baby on the way into a home with no money down, because they don't have any, and we know we've got a 20-year-old HVAC system, let's go ahead and replace it now. Let's take care of them so that 2 years from now, they're not trying to scrape together $10,000 to replace an HVAC system, put themselves in a bad credit situation, right? Where they have to go borrow the money some way or put it on a credit card, for goodness sake, and take 30 years to pay off a credit card. And they can put it in a mortgage right now and take care of it up front before they get in the home. Especially baby on the way, new family, let them have a peaceful, good kickoff to their household formation in their life. As well as all the other renovation loans. So regardless, I don't care if the house is half burned to the ground, we can fix that. And we can do it with as little as 3.5% down in a lot of cases. So we're here to serve you. I know I probably missed something, so I'm going to kind of defer to my team that's on the call. They can speak up if they've got something they want to add. But whether it's, like I said, first-time home buyer, move-up buyer, investor, or maybe they have a need of some kind that they can't get out of the house due to COVID, or they're elderly or whatever, or they're just scared to death of going out. We can certainly handle a real estate transaction completely online or over the phone, and we don't have to see them. A lot of our technology allows us to facilitate a transaction 100% remotely in most cases. And we'll leverage you as a teammate when we need to. So we want to be your partner day in and day out, and work with you to make sure that customers not only have a good experience, but they get to the table, they get there, with a smile on their face and the day that they're supposed to. And I think if we continue to keep open lines of communication between us and really focus in on the borrower and why we do this to begin with, we do this for them, right? This is our jobs. We're commissioned salespeople, yes. But at the end of the day, it's about the consumer, making sure they have a good experience and that they get the home that they want to buy and in the manner that they want to buy it in, right? So we're here to facilitate that for you and your consumer. So any questions for us? Anyone? Lori, is there anything that you'd like to chime in? I kind of went on a tear there for a minute.
Actually, Dave, there was a question. A couple of them, actually. Is it an issue when a seller or buyer asks for a specific attorney at closing, and when is the best time to request?
So, the attorney, the settlement agent, or the closing attorney, or real estate attorney, is 1,000% the buyer's choice, right? So as a lender, if the customer doesn't have a real estate attorney or a settlement agent that they like, most of them don't, because they don't do this every day, right? We do it every day. We'll ask the question. If they have a preference, then we'll use their attorney, as long as we can work with them. So we'll reach out and have a quick conversation. But that's something that I think would be, it's certainly part of our initial conversation. If they have a specific request up front, obviously you can communicate that with us, or you can put it on the contract that they wish to use so-and-so attorney. Most, like I said, don't know. So you'll see that we as lenders, just like you, fall into a groove with attorneys that we work with, and we know that they know how to work with us, and it makes things simple. And so you see a lot of the same attorneys being used by, and that's all lenders, that's not just us. But if the customer has a desire to use somebody different, that's totally fine. What else you got?
Okay. The next question was, how are lenders dealing with borrowers that have been laid off recently but are returning to work as of late?
Okay, that's a really good question. So one thing that I didn't get into is the whole, with forbearance and employment. As a lender, we are checking on their employment status clear up to the moment that they close. So that's an ongoing conversation where we're explaining to them at the beginning of the application. We're asking them the question: you're employed. Do you have any inclination, or is there any thought that you might not be employed anytime soon? And so we're also asking their employer the exact same questions. Employer, is Bobby Joe, is he still employed, right? Is he going to be employed? And the day of closing, typically we would do that a few days before closing, and that's that. But now we're doing it the day of closing, right up to the closing, and making sure that they are employed. So for you as real estate agents, having that conversation with your consumer is a big deal, because the last thing any of us want to do is spend 30, 45 days, working with somebody, tying up a property and spending money when folks aren't employed. And trust me, we've had a few of them in the last 30, 60 days that became unemployed during the process, or became unemployed the day of closing, or found out that they were going to be furloughed, within a few days. So that's something for you to keep in mind. What else do you have?
I actually don't. Oh, well, I do have one. It says, what if they are furloughed?
So if they are furloughed, we're going to want them to get back to work, and we're going to need proof from their employer that they are back to work. And I think the rule is, we're certainly going to want 30 days pay stubs, but Lori, do you remember what the specific rule is on that?
Yeah, we just want to see that they have at least a pay stub showing 40 hours a week. So if they get paid every 2 weeks, we need a pay stub showing that they've gotten 2 weeks paid.
There you go. So they have to return to work.
Yes.
Pretty important.
I don't have any further questions.
Okay, Lori, was there something that you wanted to say that maybe I missed, or you want to add?
Well, that was the only thing I wanted to add, is about COVID-19. I know everybody's tired of hearing about it, but unfortunately, if we have customers that have been laid off in the last 2 months, and if they apply for a loan, even in the next 6 months, it's going to be important, because it's going to make their earnings lower. And we look at year-to-date earnings, we look at their current earnings, we look at all of it. So it's just more important for us, more than ever, to have a good conversation with each other. And I'm asking every customer that I talk to if they've been affected by COVID, if they've been laid off, and I'm not drilling them. I'm just asking them, well, great. If you've been working the entire time, and they say, yes, that's wonderful. You're one of the lucky ones. I am too. We just kind of talk to them about that, because some customers have blatantly not told me. I had one that didn't tell me at all. And he just told me no, that he was fine, but his hours were cut in half. So he was still working, but he wasn't working his full hours. So we need to work together and make sure that we're getting all the information from the customers so that it is a smooth transaction.
Very good. Well, we certainly appreciate the partnership with you and out in the field, and the partnership with the Kanawha Valley Board. And you know, we want to be here for you and answer questions as they come up. You know, this is obviously what we have at the moment, but you can reach out to any of us at any time. Like I said, you got Sarah in Kanawha Boulevard, Chrissy there in Charleston as well, and Lynn Spurlock, Dustin Miller, and of course Lori Harless. So we're here to, like I said, make sure that everybody gets what they need and that the consumer has a good experience. And it takes all of us these days. It really, really does. We want to make sure that that happens. So having a partnership and good communication between us is now more important than ever. So whatever we can do, any ideas that you have, or you know, if there's things that you see that we're not doing that we could be doing differently, please tell us. I mean, we are certainly not perfect, certainly not. And learning every day how to find new ways to do business and how to navigate what's out there in front of us. So always open to conversation, always open to ideas and suggestions. Please bring them ahead.
Thank you, Dave and Lori and Sarah and Linda. I'm not sure if she's on here or not, but we appreciate your time.
We appreciate
Thank you all.
y'all.
We appreciate you all.
Appreciate the opportunity, and please feel free to reach out anytime. Hope you enjoyed your lunch. And next time we'll buy you lunch. Okay? Thank you all.
See ya.